Thank you, Chair.
Good morning, Mr. Fraser. I would like to ask you about the GDP forecasts that you have, in which you note in your opening statement that GDP grew solidly by 1.8% real to the June quarter, and you're forecasting it to rebound to 2.75% in 2017-18 and 3% in 2018-19. When was the last time Australia had a GDP growth rate of 2.75% to 3% in the absence of a mining boom?
In the absence of a mining boom?
I'm sorry, I don't have that figure to hand, but
I'm surprised you can't memorise that sort of thing, Mr. Fraser.
I'm getting old.
Yeah, aren't we all?
Senator, we actually don't have a data series long enough in front of us.
A fairly long time ago,
the mining boom's been running for 15 years, so it is. So we've got to go quite a way back.
Yes. Okay, that's probably sufficient for the purpose of my question. It's a long time ago.
But my recollection is that in the 1990s we were getting growth rates above that.
So it strikes me that it's a very ambitious forecast, and I'm wondering, I know Senator Whish-Wilson's sort of started to ask you about it. How confident are you that it is a realistic forecast?
Well, they're like all our forecasts. We are confident, but they have confidence intervals around them. You know, the one thing we know is that, you know, they're forecasts. They're our best judgment. They're our best judgment informed by our analysis, our modelling. They're not totally model driven, and they're informed increasingly by our contact with the private sector and the feedback we get from that. But as I think I said at the last estimates, we take considerable comfort from what's happening in the international arena, and we have all. It's coming back to me actually. I think coming out of the recession in the early 90s, we got 3.25. I think, but that was coming out at very low rates. But the international environment is a big factor in it, and they're our forecasts, and we stick with them.
Yeah. Does the projected return to surplus or balanced budget in 2021 depend on that GDP forecast?
Not totally, but it's obviously assisted by our forecast.
So this year's budget projected the return to balance in 2021. Last year's budget predicted a return to balance in 2020, and the year before that in 2019, if I recall. Each of them were looking forward to 4 year, and they were saying we'll return, well, I think the word was surplus, but I won't go that far, return to balance in 4 years hence in each occasion. So the target, the point at which that occurs is moving forward in each case. So my question to you is, if we don't achieve 2.75% to 3% growth in GDP as you have forecast, does that also mean we don't return to a balanced budget in 2021?
No, it makes it more difficult.
More difficult, meaning less likely to be achieved?
Well, look, the budget outcome and the trajectory over the 4-year period are a function of many things. Obviously, the economy, as it affects both receipts and outlays. Obviously, the more people who are in employment, the less call we may have on a lot of government assistance programs, and the links with receipts are pretty clear cut. But there are also measures available to the government to take as well. And that's why I'm saying if the forecasts are not met on the economic side, that doesn't mean you're not going to get the balance. It just means there might have to be other measures taken.
There are always a lot of moving parts, I guess, and what I would point to is if you look at the final budget outcome for 2016-17, it showed an improvement compared to what was anticipated at budget time this year. To compare that with the 11-week period from the 13-14 budget released in May 2013 to the pre-election economic and fiscal outlook when there was a $3 billion a week deterioration in the budget bottom line. So we now have actually an improvement compared to what was the forecast earlier in the year. Now, and the final point I would make is if you look at the monthly financial statements that I release on a regular basis, even for the 17-18 financial year so far, touch wood, we are actually tracking better than what was anticipated at budget time for 17-18, both on the revenue and on the spending side of the budget. So there are always a lot of moving parts, but as the Secretary says, the government always has the opportunity and the option, of course, to make further policy decisions to advance budget repair.
All right.
Senator, if I may,
Yes,
I now
Mr.
have a data series in front of me that goes back to 1981. And I think going into the mining boom, the economy was growing above 3%, and through much of the 1990s, and then beyond, way back. But so it's not, so on a historical basis, it's not, it's not unreasonable.
No.
But
All right.
also, I might add, it really depends on how you think of potential growth. And potential growth was faster in the 1990s than it is today. And our view of potential growth at the moment is that it's around 2 3/4. So the forecast is that we're going to return to about potential. And if you look around the world in advanced economies, most advanced economies are actually growing around potential.
All right. I want to ask you about China. Well, I've still got time. I think I've probably responded in a Sir Humphrey manner and say it might be a bit heroic, that forecast, but nonetheless. I don't quite understand. You're relatively comfortable about China's debt, and I'm not an economist, so it may be that my ignorance is my problem here. But I wonder if you can just repeat or elaborate on why you're not too concerned about China's economic outlook and particularly its debt.
Sorry.
Yes, go.
No, not too concerned. Yes, I think I flagged it in every appearance before the estimates. 2 points. One, what I mentioned in the statement, that the debt is predominantly domestic. So it doesn't have the international exposure, and they have the ability to rein in the financial institutions in a way that in some ways may not be palatable for us, but they certainly have the control that we don't have and other countries don't have. But the thing that makes me a little happier, and maybe I'm an optimist, when I was in Beijing with Mr. Brennan some months ago, they were very open about discussing it. I met with the 3 leading agencies, the bank and essentially the financial ministry. They were very, very open about saying we have a problem with debt. And they distinguish, so they recognise it, that's part of, I'm not a doctor, but I suspect the first part of fixing yourself is recognising you've got a problem. And they distinguish very clearly between the official, the 5 major banks, and the shadow banking system. And in giving away confidences, but some led me to believe, both inside and outside government, that things had to be cracked down quite dramatically. I met recently with the chairman and CEO of a very large Chinese firm that operates here in Australia, but they're on a visit, and they were very open about talking about the debt issue. And how that's manifesting itself is in individual applications for credit now have to be approved, and they have a bureaucracy of some note, and they can do that. The $50,000 limit is being enforced. They are also making sure that they say that with the shadow banking groups that they are looking precisely at what they're lending for. The number of times it was said to me, you know, the last straw were these Chinese businesses buying football teams in Europe or buying ridiculous trophy assets. So I get the impression we're moving in that direction. The chairman of this company emphasised that as well. He was moaning a little bit because the crackdown was filtering back into the 5 major banks and also to his company, which is a very large one. But I get the impression they've recognised it, they're doing something about it. But the key point is domestic debt. And they realise that if they're going to take their place that they want to in the world, they can't be lumbered by having these extraordinary debt levels. They're very, very alive to that. That was not the case when, in my former life, when I was operating 3 companies in China, where debt, particularly from the shadow banking system, was up, it was easy, very easy. And it's also manifesting itself in some of the foreign investment flows we're seeing coming to Australia. And we've seen that in the applications for foreign investment for residential approvals in particular. But also earlier this year we had a major firm in Western Australia, a Chinese firm, which had approval, pull out of the deal because they couldn't get the $1 billion Australian financing that they thought they would have. So I may be Pollyanna a little bit, but I think they've recognised it. It's a domestic issue and they're starting to do something about it. But be mindful, we keep it very, very close eye on it. We have 3 people in Beijing, and they spend a lot of their time talking not just to the people in Beijing, but to the financial institutions and the businesses in the various provincial capitals. And we're also seeing it with the people I've been speaking to from Hong Kong, who often rely on Chinese mainland credit. So we don't want to have overshooting, and some in China are openly talking about, well, as long as we have growth at about 4%, and of course their targets are more in the upper half of the 6s, as long as we have 4%, we can get through this. So not comfortable, but I just want to put it in context, and we keep it under close watch. They are so important to us on many fronts, and it's foreign investment as well has been affected by the lower exchange rate, I should also mention, and the service industry exports. So that's a little bit of a clarification, but don't think I don't think about it. We think about it a lot.
All right. Thank you. Thank you, Mr.
Thank you,
Fraser.
Senator Lyon.